friends, welcome to my channel and thanks for watching this video. As we have ended with one of the most volatile weeks of calendar year 2022, let us discuss about the week ahead as far as the US weekly market report is concerned. So welcome to the another session of this series. As we have seen, things looks volatile, and it is indeed volatile if you are looking at the next couple of weeks concerned. So let us discuss about various details which will drive the market in the upcoming week. But before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notifications. Now, past Friday was one of the big movers which cheered up the global stock market. As you can see in front of you, the DAX went up by 3.67% or 500 points, the FTSE 3.91%, the CAC 3.55%, and this is not it. In Asia, probably it will make an impact on Monday as well, but still Nikkei went up by 500 points, and then we have Kospi, which is up by 1%. Then coming to US, the Dow Jones, which is the biggest mover, 834 points or 2.51%. S&P nearly 96 points, which is 2.24%. Nasdaq 1.64%. Russell 2.25%. And the VIX gone down by 9% and currently closed at 27.59. Now I need not to read all these things, but I just want to let you know that this is a short covering which has shaped up not only in a specific market but across the globe, which means the driving force behind rattling the stock market is quite similar, and this is a global storm which is impacting the market throughout. Now, there are people who are also saying that are we done with the correction? So this is a very big question, and probably everybody will scratch their head in the next couple of months as well to find out answer of this simple but quite a puzzling question: is the correction is over? Now, if you're looking at the commodity, although it has retraced a bit because it is heavily driven by news or geopolitics, we have seen some sharp downside on intraday basis or in the last two trading session, but it is still quite high, and similar kind of impact on gold and silver as well. But let me tell you, the downfall is not very big yet. If it is continue to be on the downside, then it will be a different thing, but as of now this is not a big downfall. Now, going down, you have only one news because of which the global market gets impacted. So this is what you can see, this is what you can hear, probably this is what you can read. But let me tell you one thing, this is a very simple observation, and anyways, the global stock market has been falling since October or November 2021. This event, this unknown event, is just a catalyst which has indeed played a big role, but this is not the reason because of which stock market is falling. Stock market has other issues, but this event gives a strong reason for the market to become extremely volatile, and we have seen moves on both the side. Now, this is very similar to some common things that we do on a regular life. Like, even if you try to consider you have one stick which is made out of plastic, forget about the wood, made out of plastic, but if you continue to bend it on one side, then on another side, then again on the same side, then another side, what will happen? Eventually it will break. So what we can see in the market, the trend is already on the downside. These unforeseen events makes market even more volatile, where things can happen on both the side, and this is happening. So events are happening on both the side, you will see big sharp pull downs, and then again global stock market bouncing back like anything. But the overall trend is not yet stabilized. So if it happens couple of time again, the chances are it will move on the downside rather than on the upside. So this is a very important thing to understand, or the analogy behind moving or behind how the stocks or the market is moving is very important. Now the important or very important thing in this geopolitical issue right now is it is not only restricted with mouth of words or land issues, but it includes cyber, it includes space, everything has been included, and that's what it makes a very dangerous cocktail to deal with. So please be aware about this fact that market will remain volatile even if it is moving on the upside like anything. If you are checking your portfolio, it will not move like the index. Okay, if it breaks down, there are many portfolios which have broken down. It's not going to mend very quickly. As you can see in the stock market, you can probably make 5, 10, 15% intraday gains, or stocks have recovered, but this will take time. Now, moving on to different important things. Now, let's quickly do the recap before talking about the charts we have. So as I've already discussed how the indices have been moved or has moved in the last trading session, so this is particularly covered. One thing is the 10-year bond yield, which is significantly higher, and the rise in the interest rate, it will move further on the upside, because this we are talking about something for long term. Trend will not get impacted because of these small events. Also, if you are looking at the treasuries or the yields, they are mostly on the positive side. Apart from that, the US index is comfortably, or the dollar index comfortably holding above 96, or the last close was 96.54, which is also very strong and stable as of now. So things are volatile, but things because of which markets were in correcting mode, they remains intact. A catalyst makes market much more volatile, and it will remain, or the probability is the volatility remains high in the upcoming sessions as well. So let's go and quickly reanalyze all the important charts we have. So let's start with the dollar index itself. Let me tell you one thing. If it continues to sustain above 95, to be specific 94.5, but 95, if it continues to sustain above this level, the uptrend or the upper end of the range is intact, which means, and on the upside we have 99.7 and you have 103. So the upper end of the range is pretty much intact, and if dollar index continues to sustain above 94.8 or 95, you will see great strength or good strength at least in the upcoming sessions moving forward. Now, so the next chart we have here is the big mover of yesterday, and that will be Dow Jones. Dow Jones, if you are looking at the price chart, I will rather focus on the indicator, because indicators are giving, and obviously in the long term they are giving much more clear signals when compared to the price action, although it has exactly taking support at 20-day moving average. So looking at the indicators, which has just turned negative, it does not matter how fast the short covering is probably be, but there will be two probable scenarios, but the outcome of both these events will be same. First scenario, the correction continues and it will test a definitive support from where you will have a broad recovery in the market. In second scenario, the short covering continues and Dow Jones went back to its previous levels or previous highs, or it may further move on the upside. And in the second scenario, when the market crashes again, it will be a very, I would say, a disastrous situation, because by that time you will not see the stocks has recovered properly. And when the index started falling again, the fall will accentuate. So in case if a small cap or a mid cap stock corrects 40% in a single correction, and in the second scenario, if the index moves again and the overall market stabilizes, next time the correction will not be 40%, but it will extend up to 60, 70 or 80%. So this is the risk we have here as far as the uptrend is concerned. So if you are looking at this trend, you must understand what the trend is saying to you. Now, as far as the range is concerned, the range is very similar, and I think, if I am not wrong, I have said the same thing in my previous session, and probably there is no change in the view. So monthly chart will give you much more clear picture when compared to daily or weekly chart. And if you're looking at the monthly chart, there is no denial that there are larger trends, or there are big support levels which are yet to be tested on the downside. And in this case, we at least have a retracement towards 28,000. This is a fair possibility, and I'm not making things up. Next chart will obviously be the next chart is Nasdaq, and we all know how volatile it is. And if you are looking at the indicator, similar story, and this is very clear that a negative divergence has happened. It doesn't matter how fast the recovery could probably be, but the scenarios which I have explained for Dow Jones will apply not only for Dow Jones but also for the Nasdaq. And if you are looking at or if you are trying to find out the support level, it is actually for both Dow Jones and Nasdaq, it is actually at least the 50-day moving average of the monthly chart, where you can, or where the market can find, indices can find a good support. And right now, Nasdaq has indeed made a very sharp jump, but we need to see whether this will stabilize or not. And let me tell you, the correction has started even before this geopolitical issue between Russia and Ukraine, because the top has made in the month of November 2021. Then in December, a downside, a potential of downside will emerge, and then in January, a big slide down has happened from 16,000 to 13,000, and in February we have this geopolitical news. So the trend is already down. This event worked as a catalyst. This is clearly visible if you are looking at the chart. So the trend is there. What makes this trend volatile is these unforeseen events, and let me tell you, there will be much more. I am not saying that I am bearish, that's why I am talking like that. I never try to do so, and I will never do that, because if I go against the trend, I can't able to understand the market. What I am saying is what the market is doing right now. This is it. Okay. So if the market is saying that, if the indicators are saying that this is highly negative, I can't predict or I can't see index or stocks moving upside. And if it moves with further short covering, the broader market will not respond. And next time when the falls happen because of X, Y or Z thing, the fall will become even more bigger than what we can see or think right now. So just understand this thing. So be aware. That's what I can say. Both Dow Jones and Nasdaq can or will have the ability to jump back and retest its previous high. This is a very fair possibility, but to move index up, you need an index management. But to push the overall or the broader market on the upside, one must, or the whole country needs to make that effort. or the whole industry needs to make that effort. So there is a big difference over there. Now, the next big thing is the VIX. We all talking about this thing, and let me tell you, the VIX, even after this sharp uptrend, and no doubt that there is a fall. If you will check CBOE VIX, you will see a 9% fall. But even with this fall, the VIX standing lot higher, because this is a risk zone. 27 is not a small number. Okay, above 15 or 16, market will anyhow become volatile. So at 27, it is indeed very volatile. And let me tell you, you have a support level at 27. If the CBOE VIX continues to sustain above 27, then there is a possibility of 45 and 48. And let me tell you that VIX will do it in couple of days. This kind of move is not bigger for VIX, but because this is just a reflection of how people are thinking or how the overall market are taking positions. So VIX is one of the biggest concern we have here. And yes, the problem with Brent. So this is the chart for WTI crude, and if I zoom this chart, you can see a trend. If I zoom this chart, you can definitely see a trend out of it, which is this one, right? So this is a trend where there are two edges and they are also very clear. So on the downside, you have your support at 73.38, and on the upside, you have the upper end of the range, which is in between 113 and 123. So this is what or how the trend looks like as far as the WTI crude is concerned. Now, one more thing, because this is one of the important aspect. So the next chart we are going to look at will be the gold future, because it is an indicator of risk. Okay, and when you have good risk or big risk in the market, gold is always responded or given you that hedging advantage. And last Friday we have seen that gold has closed quite sharply on the downside. But what is the important thing is where actually it has closed, because let me tell you, although this stuck in a range, but if it continues to close above $1,800, the next resistance or the next target, so the next target we have here is 1935, and once it again started trading above 1935, I'm talking about gold future, the uptrend resumes. So although there is a correction, but the overall trend is indeed positive. So instead of this short covering, we can clearly see one thing, that the risk factor is not going down or not going away from the market, and that's what at least makes me curious. And when the chart is showing negative indicators, I'm very sure that if it does not happen in the short term, it will increase the long term pain. So this is the end of the video.